Hey, welcome or welcome back. I have a new position in my portfolio as of June that I've been buying, and that stock is Dexcom. In this video, I'm going to attempt to explain why I'm bullish on the company outlook, at least for the near to medium term. And I'll also try to cover some of the longer term risk factors to look out for in regard to my thesis. If you're not sure what the company does, Dexcom is the market leader in the United States and the second place contender internationally for continuous glucose monitors. These monitoring systems allow type 1 diabetics, type 2 diabetics, pre diabetics, and anyone else with concerns regarding their blood sugar to monitor their blood sugar throughout the day. Dexcom's current flagship product is the Dexcom G7 15-day, with the G8 expected to be released in late 2027 or early 2028. They also offer an over-the-counter product called the Dexcom Stello. While not the only over-the-counter CGM, the Stello is the only over-the-counter CGM that is currently approved for children who are as young as 2 years old. Dexcom also offers the Dexcom One Plus, which is marketed as a simplified, cost-effective solution for type 2 diabetics. Dexcom's key competitors are Abbott Laboratories and Medtronic, which recently spun off its diabetes business into a new company called the MiniMed Group. Abbott is the international leader in continuous glucose monitoring and holds the second place position in the United States. MiniMed Medtronic is sort of a distant third place at this time, but it's worth keeping an eye on as they are the only one that also develops insulin pumps, meaning they have a complete closed loop system that works for both monitoring and insulin delivery. Despite this, Medtronic MiniMed has fallen behind other monitoring and insulin pump companies in recent years. But with MiniMed as a newly spun off company, they may have an increased level of focus going forward. Abbott's flagship product is currently the Freestyle Libre 3, which is actually known for being more accurate than Dexcom's G7 15-day and also provides readings every minute as opposed to the G7 15 days readings being every 5 minutes. One advantage that Dexcom does have with the G7 15-day is that the warm-up time for a new sensor, meaning the amount of time before the new sensor is functional, is 30 minutes with Dexcom's product versus 60 minutes with Abbott's product. You may wonder then, where is Dexcom's moat if Abbott's current flagship product is superior to Dexcom's? And the answer is in Dexcom's compatibility with major insulin pump delivery systems like Tandem's t:slim and Insulet's Omnipod. Abbott is actively trying to eat away at Dexcom's moat here, and it's true that the moat of any of these companies is narrow, but I do believe that it is likely that there will continue to be multiple competing players in the near to medium term. Another key advantage that Dexcom has is that Abbott's product is not capable of pairing with two Bluetooth devices at the same time. This is key because Dexcom's G7 line allows the sensor to pair with both an insulin pump and a smartphone, which can then send blood sugar readings to parents, to a spouse, or others who can also monitor the readings via a Dexcom Follow app. If you're a parent of a child who is a diabetic, being able to see his or her blood sugar readings while he or she is at school or at a friend's house, etc., is a feature that you are probably going to want. Under the topic of moats, I'll also again bring up that the Dexcom Stello being approved over the counter for children ages 2 and up makes it the only CGM that is available over the counter that is approved for people of that age group. Finally, it's also worth noting that the upcoming G8 is likely to be superior to the Freestyle Libre 3. I'll talk more about this in a little bit. Ultimately, investors need to ask themselves if they see Dexcom and Abbott as a duopoly, or if you include MiniMed, a triopoly, or if the narrow moats will eventually lead to winners and losers. Another factor could be how AI influences the development of CGM technology and diabetes treatment technology in general. I would see some moat in the fact that CGMs require physical manufacturing networks, but this is, is this eventually commoditized, or is a cure for diabetes even found eventually, which would be great for humanity, but not exactly probably great for Dexcom's business in the long term. So these are all questions that are worth asking for investors. Now, all that said, why do I think Dexcom stock is currently a buy? For starters, I believe the market has been pricing in multiple headwinds for the company over the past several years since its 2021 peak. Among them, some execution mishaps and challenges, a price war with Abbott, and GLP-1s potentially contracting the market for type 2 diabetes patients. However, from both a technical and fundamental standpoint, I believe I am seeing signs of a turnaround for the stock. I'll focus the argument on 5 factors. 1, the valuation. 2, product development. 3, an expansion in the total addressable market for Dexcom's products. 4, an analysis of the stock chart for Dexcom. And 5, where I think the overall healthcare sector of the market is headed. I'll start with the valuation. At this point, I would say the valuation is beginning to look like growth at a reasonable price. The stock currently trades under 30 times forward earnings with a PEG ratio under 1.5 and with expectations for low double-digit revenue growth, around 11 to 12%, and improvements to gross margin. In the last earnings presentation, the company also raised guidance for their non-GAAP operating margin and adjusted EBITDA margin. So in short, solid, steady growth and improving margins at a reasonable price. I'll provide a more detailed valuation model later in this video. In terms of product development, I also believe that there's a solid chance that the G8 will be the next major step forward for Dexcom's product line. Dexcom released 2 versions of the G7, the standard G7, which was good for 10 days at a time, and the G7 15-day. The G7 line was somewhat of a disappointment. The G7 15-day has had a failure rate as high as 26%, which means if the G8 is more reliable, that could help Dexcom's margins. Furthermore, some Dexcom users have preferred to stay with the G6 over the G7 because they favored the G6's functionality. The G8 is touting not only a smaller size sensor to the G7, but also better technology. Dexcom is saying that the sensor will adapt in real time, leading to increased accuracy. They are also planning to have the sensor eventually read both potassium levels and ketones. Continuous potassium monitoring would be beneficial to those with chronic kidney disease. This leads to the third factor I mentioned, expanding the total addressable market for Dexcom's products. We're already seeing this with the Dexcom Stello being approved over the counter for children as young as 2, but this can also happen much more as Dexcom continues to argue that continuous glucose monitoring has beneficial effects for type 2 diabetics who are not on insulin and for pre-diabetics. This could expand insurance coverage for their products and increase their TAM. It definitely seems like Dexcom is trying to position itself not just as a company whose products treat existing diseases, but as one whose technology can benefit people in a preventative sense and for overall health as well. They just recently purchased a company called Nutrisense, which uses continuous glucose monitoring data to try to help people adjust their diets and lifestyles to lose weight, get better sleep, have more energy, and be healthier overall. The fourth factor I said I would address is the Dexcom stock chart. So let's take a look at that. You can see after a big plunge in 2024, the stock has been in consolidation for about 2 years. Here on the weekly chart, we can see that the stock finally made a higher low and a higher high. We also have had a crossover of the 9 and 21 EMAs on the weekly chart, and the stock is sitting above its 20-week SMA and 21-week EMAs. It also tested the 50-week SMA and is now above the 100-week SMA. So the stock has support here with some indicators of momentum, and it is not overbought. The overall structure of the chart to me says that the probability favors price moving to the upside. They are reporting earnings on July 30th, so with that will be something to keep an eye on. There is a gap on the daily chart up to $107.56. That would be something to also keep in mind, and if it did move up aggressively toward that level, that would obviously be a very strong move. Finally, I'd just like to throw in where I think the overall healthcare sector of the market will be going, because I could see the healthcare sector showing more strength in the near future. which would also benefit Dexcom. Another stock that I own that I've covered on this channel is Elevance Health, and I am very bullish on the direction of that stock's price right now. If we look at a chart for XLV, which is the State Street Healthcare Sector Spider ETF, we can see that it appears to have broken out to the upside here, and the sector to this point in the year has lagged several others. So I could see it playing catch up going into the second half of the year, which would benefit Dexcom's stock price. Looking at a more detailed valuation model here, if Dexcom grows with the expectations here on the screen, you can see my future expectations or assumptions here, I should say, for total revenue, net income, shares outstanding, earnings per share. It's possible that the stock price doubles over the next 5 years, or at least comes close. If there's some multiple contraction, that might be more difficult. As you can see here at different PE ratios, what the total proceeds would be after fiscal year 2030 with these assumptions. But it's also possible that if they reaccelerate revenue growth because they do expand their total addressable market for their products, that it could actually outperform these numbers as well. So personally, I think the stock is showing signs of momentum. I don't plan on holding it for 5 years. I know that's sort of a something that a lot of value investors don't always like to say. They want to buy things that they hold forever. I think there's different ways to make money in the market. I don't plan on holding this stock for 5 years because I think it's going to show some momentum in the short to medium term. But I've sized the stock within my portfolio in such a way that I could hold it for longer if necessary. And obviously, I'll adjust how much of the stock I own or even sell it entirely if the thesis falls apart. So ultimately, you need to decide whether you think margins will be crushed by a pricing war with Abbott and potentially MiniMed, whether technology will render Dexcom's products obsolete, or if you think that the bull cases like the one I laid out in this video will hold up. That's ultimately a decision that you'll have to make, and you should do your own research. But I have been buying the stock since early June, and I'm excited to see what happens with the earnings report next week. If you found this video helpful or informative at all, please click the like button, subscribe, click the bell, hype the video, and leave a comment down below. Tell me what you think. It's not financial advice. Always do your own research. And also follow me on X at Stock Sale Flyer. Take care. Bye.